Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the reasoning behind the moves today so that we can better understand tomorrow. And this time around, we're going to be taking a look at the gold market. Now, gold overall had a relatively interesting start to the day in that, it started out looking like it was just going to be absolutely worthless in terms of movement. We opened up beautiful start to the day, strong bull signaling after a strong bull day up that was likely going to be seen as a pullback for the buyers to jump in on and take the market higher. That's why there's an arrow there. But then you'll notice what happened, right? All of the bodies, excluding the wicks, all of the bodies formed a range of about 5 ticks. So in terms of overall movement, not a whole lot to work with on gold this morning. Very interestingly, though, this was exactly what we were talking about wanting to see in the room today. We closed outside of it and then immediately in a twin reversal type scenario shot right back up again. And that's another big clue to become a buyer and push the market up. But given the overall range sentiment, it changes things a little bit. Instead of a strong bull, move after a pullback, we're not necessarily looking for that anymore. Now we're starting to see this as, well, they obviously can't get anything going, so any breakout at this point is likely just going to be a failure. And if we can find resistance off of a major area of resistance, like a channel high or an area of resistance that we talked about in the blog, lots of those areas all came into the same place. We had a huge push higher. The buyers were taking their profit into that move directly into an area of resistance where we saw an immediate turn right back down again. So the reason why there's a red arrow here is simply because you're selling an area of resistance given the context. Right? You have a big area of resistance in an otherwise range-bound day, probably not going to hold very long. And when it comes back and taps the high again, now we're starting to get confirmation of a possible wedge top that holds as well and pushes back down. So everything pointing to the downside off of these highs for a beautiful rotation down. Now, I'll be the first one to admit, I wasn't expecting this. I was not expecting some massive, 40, 50, 60 tick drop. That wasn't really in the shelf. We were looking for more of a range fade at the bottom, but when you start seeing this kind of stuff, things have changed, right? The sentiment of the market has completely shifted so that you need to figure out, hey, even though we are in a range and this breakout will maybe fail at some point, this is drastically different from what we saw earlier in the morning. Nothing like this type of candle has formed all day. This is the first one. So with this kind of breakout kind of in the middle of things, it's more like a breakout move that's starting up the possibility of a big bear trend. But you need to wait for a little confirmation. Also, if you're going to be selling here, your stop's got to be really far away. So the risk reward is just massive. Now, in this case, it would have still worked, but I shied away from that one because it wasn't really, when you have that big of a move, it's really hard to throw on a 60 tick risk when you're not sure what's going on completely. We see a pause in the market, and that is our reason to execute. We have a big drop lower, the first pause in the move down, given the context, looking for them to want to cycle from major resistance to major support, allows sellers to dive into the market and finish the job off. After they finished the job off, they ended with a slight wedge bottom, just like what happened up on here, up at the top, the wedge highs. It pushes up, finds resistance there, and dumps right back down through the lows. The big difference here, we find a bottom down here. It's possible that we're finding a low where the sellers may just run out of steam and push back down. But if that is the case, the buyers should really show up strong here as the sellers did here. They slam the market down. If the buyers are going to be taking over, they should do the same thing, and they didn't. We get a bull bounce, nice bull candle, good follow through, but then it runs into that prior little bounce that they had after that dump lower and can't even get through it before getting slapped right back down again on a huge bear engulfing candle set. Is another reason to jump on board of the sellers, assuming that they're probably not done yet. And maybe this candle now, maybe this whole move down is starting to look for some major targets to the downside. So that is the major reason why all of a sudden from a possible range day looking to fade the move switched into a major breakdown looking for massive selling continuation. And that's the importance of learning how to read these markets so that you know when to shift gears like that. So a beautiful example of using that and just kind of taking a peek into the market's mindset. Hopefully you learned something from it. Hopefully you found it interesting, and we'll see you next time.